Hey everyone, today I wanted to talk about something a little different. But before we get started, make sure you hit that like button for me. Also, 77% of people who watch my channel do not subscribe. And so today I'm asking you to hit that notification bell, hit that subscribe button. I wait for you all. You tuned in for a reason. You tuned in to get some good game, and I'm about to give you some good game. So I'm gonna wait for you. I'm gonna wait for you to appreciate me just the way I got up today to appreciate you by making this video. Go ahead. I'll wait. You hit that like button already? Okay. That's good. That's good. 77% of people are not subscribing to my channel, but they picking up all the game that I'm giving out. That's crazy. That's crazy to me. All right. Well, thank you for hitting that like bell. I really do appreciate you. It took a lot for me to get up this early and produce this content for you every single day. It costs a lot to make this setup that I'm now working with. It costs a lot to have this handheld device. And so I really, really appreciate you supporting the channel because it's only going to allow me to put out better content for you and everybody else. So today I wanted to talk about the um, the common mistakes that I see in the stock market. The common mistakes that I see from new investors in the stock market. And I went over one in my previous video, and I'll still go over it today because I believe it's very, very important. And that is um, a lot of people look and say, oh, Festus is a dividend investor. And that's my name, Festus. And I'm a dividend investor. I have 30 different holdings. Okay, I know how I can beat the game. I know how I can be the smartest person ever. I'm going to invest in a company with the highest dividend. That's a bad idea. I'm going to make you all 5 years smarter. It took me 7 years to be a good investor in the stock market. So I'm about to give you 5 years worth of game in one video. Oh, I'm going to buy the best dividend paying company and I'm going to be like that. No. The companies that pay the highest dividend typically do not grow. All right? When you say you want to be a dividend investor, make sure you are a dividend growth investor. That's how you're going to make money. Again, I'm going to say it again for the people who didn't write it down. Dividend growth investor. Did you write that down? What is the difference between a dividend investor and a dividend growth investor? I'm going to start bringing people onto the channel to help you out and see if they actually know what the differences are. You guys are going to be so much smarter than the average person, I'm telling you. So a dividend growth investor is someone who doesn't invest just for the dividend, because you could get $10 in dividends a month, but your stock goes down from 100 to 89. Did you make money? No. You lost $1, all because you wanted a $10 dividend. Why is that smart? It's not smart. You're losing money. Or you get a $10 dividend every single month, but every month your stock goes down $1. So now you was getting $10, you went from 100 to 99. $10, you went to 98. $10, 97. Is that a good investment? No, it's not. And where are you putting the $10? Are you putting it back into the same company that's going down in value? If so, eventually you'll be broke. If so, eventually you'll be broke. You want to invest in a company that is going up every single. You got to look at it on a 5 year trajectory and look at what it's planning to do. So here's the step number 2. Big game. I'm talking about big game I'm giving you. I love when I see companies in the red in year 1. In this year, if they're red, I love seeing companies in the red. You know why? It means I'm not buying it at its peak for the year. But when they're green for a 5 year period, it shows that this company has been profitable for a while. I'm not going to invest in a company that's been red for 5 years. That means if I had held this company for 5 years, I didn't make no money. That's stupid. So if you got AT&T and you look at their 5 year and they are broke, why would you invest in it just because of their dividend? You're not making any money. So that's why I always tell you all, when you first start off, get your VOO, get your SPY, get your Dow Jones DOW, get the VTIs of the world, right? Get those big ETFs, not even stocks. And what is an ETF? An ETF is a bunch of companies in one, right? Your VOOs, your VTIs, your SPYs, those are all a bunch of companies combined together. So VOO, that's going to have Amazon, that's going to have Tesla, that's going to have Facebook, that's going to have Netflix, that's going to have all those companies in one. Why? Because it's going to limit the amount of risk you have. If you bought every single business in the world, are all the businesses going to fail? No. Maybe some will fail, but some will be profitable. And the ones that are profitable are going to get most of the money. And if you're getting most of the money, you're going to come out on top. You could literally buy everything in the stock market, one share of everything, you would still be rich. You know why? Because the ones that sell are going to put it back into the ones that are making money. So that's essentially what an ETF is. You get a whole bunch of companies and you're almost guaranteed to make money by investing in it, right? So this is why I tell you guys to invest in the ETFs early on, because it doesn't really have a lot to do with your brain power. You don't have to be a smart investor to make money. You don't have to think about one or two different stocks. You can just invest in an ETF and be set. VOO, SPY, VTI, I said it again. So if you are ready to say, you know what, I'm ready to pick good companies like NOBL, a good ETF like NOBL that is only investing in a dividend aristocrats. Wait, I don't need NOBL to invest in a dividend aristocrats. I can type in NOBL, look at all the companies that they invest in, and then look at all the companies they invest in, maybe 25 to 30 companies that they're invested in, and look at the ones that made them the most money in the last 5 years. So now I'm going to look at 30 different companies and say, these 5 made the most money in the last 5 years and paid out the most to NOBL. Now, the ETF management fees that you would have been paying for VOO, VTI, NOBL, SPY, you no longer have to pay the management fees because you just bought the companies outright. They're paying you a good dividend and they're making you the most money. Look how smart that is. Look how simple that is. I just gave you all so much game. Blue chip companies, dividend aristocrats, those type of names you probably never heard before. But those are the type of companies you need to be invested in. And don't just listen to me. I'm an average guy on YouTube. You got to do your own research. But that's what I've done. I've invested in dividend aristocrats. I've invested in companies that have been around for over 25 years, have paid a consistent dividend, have grown in value, and have grown their dividend as well. Yes, that's right. You might have a dividend that's 2% today, but companies might say, I'm going to increase the dividend to 2.3%. And if they do that, guess what? Now you're making more money and you're still getting the growth. That's exactly what I look for. I look for companies that grow their dividend. I look for companies that are growing. I look for companies that I like. I look for companies that I not only use but would invest in. I look for companies that have a plan for the future. Companies that have an idea of where they're headed. That's why I invested so much in Facebook when they talked about the metaverse and it said it would take 10 years. And it started to plummet. It started to go down. I said, wow, this is a great investment for me. Facebook is a $1 trillion company. They have $1 trillion in assets. They're not going anywhere. They're not going to be broke. People all over the world use them. They are starting to innovate. They're not stagnant. They're not just wanting to be around to be around. No, they're trying to be the next new thing, and they're already the new thing. So I said, absolutely, let me buy more now when it's going down. Because when it is available and everybody's talking crazy now about it, but when it's actually available for them to consume, and we all know we're in a consumer nation, Lord have mercy. Best believe Facebook will blow up. The entire world will just, the stock market is going to explode. And the money that I have in it, I'm going to be acting brand new. Okay? I'm going to be acting brand new. If you thought I wasn't humble before, best believe I will not be humble, because I've been telling you all this. Now, if you put $100 away every single month towards Facebook, 10 years from now, 15 years from now, you're going to be swimming in what I call liquid gold. Maybe the only thing that might be able to rival that is Tesla. But even then, Tesla, they're doing what's already been done. It's just an electric car. They'll go into motorcycles, they'll go into semis, they'll go into trucks, they'll go into SUVs, they'll go into vans and pickups. But we already had that in gas, right? It's innovative, it's exciting. People will love it. It's going to look futuristic. Cool. And yes, I will make a lot of money because I am invested. But Facebook, they're going into uncharted territory, something that hasn't been done. Virtual reality for the entire world. I don't think you guys understand what I'm talking about right now. I don't think you understand what type of money I'm ready to make. Yeah. Yeah. I was born for this. I was absolutely born for this. So play with me if you want, but when I act brand new, don't say I didn't tell you. So again, don't be somebody who just invests for the dividend. Make sure you know what the company is about. Make sure you know what the company is looking forward to. Make sure you know if they're growing over the last 5 years. Make sure you know if their dividend is growing with it. Make sure you know that you actually like the company, that you actually want to invest in a company, that you actually use this company. Don't buy some Alibaba and you never used Alibaba before in your life. Don't buy Nike and you never wore a Nike shoe. That doesn't make any sense. Don't buy Nike and you don't agree with what they stand for, right? If you don't agree with them, then don't buy them. Don't buy the company. Now, I personally do agree with Nike, so I like what they stand for. I like everything about them, and so I buy them. Um, it's as simple as that. So, thank you all for liking this video. Thank you all for subscribing today. I really do appreciate it, and I will see you on the next one. Peace.